people are looking at all this monetary policy, all this inflation of the money supply. They're seeing all these cost increases. They can say it's because of supply bottlenecks or shortages, but that's always the case. You know, if you print too much money, there's a shortage of everything because printing money doesn't create products. Creating products is what enables consumption. Printing money doesn't enable anything. It just lets you bid up prices. So you can always blame it on a shortage of goods, but it's a surplus of money that is the problem. But yes, during COVID, there was a reduction too. So we compounded the problem. But the reason that you're not seeing a lot more money going into gold, especially the bigger institutional money, is yes, they do not yet perceive the threat. They think everything is fine. They believe Powell when he says inflation is transitory. So they're not as concerned. They just like they believe Powell or the other Fed chairs, Bernanke or Yellen, when they said, QE is only temporary. We're going to shrink our balance sheet back down to pre-crisis levels. We're going to normalize interest rates. These were all lies that the Fed told, yet the markets believe the Fed. And now they're telling more lies, but the markets continue to believe every lie the Fed tells. And they don't look back at their track record and say, hey, these guys haven't really been honest in the past. Now, again, maybe it's not honest. Maybe they're just wrong. Maybe the Fed is just wrong in everything it says. If it's just wrong all the time, well, then why believe them now? If their track record is they've always gotten it wrong, why would they believe that now they're suddenly going to get it right? But I do think that at some point, and I don't know when that point is going to come, but I don't think we're that far off, more and more people are going to start to doubt the Fed. The Fed is going to start losing a lot of its credibility, especially as inflation continues to pick up and the Fed continues to dismiss, any concerns by holding steadfast to this idea that there's nothing to worry about, that it's transitory. So at some point, people are going to call the Fed's bluff. Like, okay, you can't do anything about all this inflation. And then gold's going to take off, right? So the opportunity now is that while most people don't perceive the threat and are just acting as if everything is fine and investing as if inflation isn't a concern, that's why gold is a bargain, and silver too, for that matter, for all the people that do understand where this is headed and can think ahead of the curve. Well, first of all, the majority of the funding, Janet Yellen said that we didn't raise taxes to pay for all the stimulus. That's true. They didn't raise official taxes. They paid for the stimulus through inflation. And inflation is a tax, and it's going to fall hardest on the lower income and middle income people. So it is going to be very expensive. We're not getting all this stimulus for free. It's going to cost a lot of money. But yes, what she's saying is this next round is going to be accompanied by some official tax increases, obviously targeted at the rich and corporations, because that's part of what the Democrats were elected to do, is redistribute the wealth and to punish people who are successful. And so they'll do that. Whether or not that's going to raise additional revenue, it's hard to say. Because behaviors change. There's these new taxes, will impact the economy. And so the income that they're hoping to tax may be greatly diminished by the tax increases themselves. So how much they'll actually raise is always hard to say. They never raise as much as they think, and they always spend more than they think. So I think the tax increases will only provide the government with a relatively small portion of what they're going to be spending on these new programs. And so they're going to mainly rely on inflation. They're going to print the money, right? The Fed is going to print the money to buy the bonds that the government issues to fund all these programs. And, the dollar is going to crash and prices are going to soar. And, people need to be prepared. Certainly to the extent the U.S. government is going to spend the money on traditional infrastructure, it's going to require a lot of those resources. And so a lot more spending on those resources is going to push up the prices. Now, I don't think it's necessarily a good thing for the U.S. economy to have the U.S. government squandering a bunch of money, probably overpaying for maybe a lot of infrastructure projects that we don't even need, that aren't even economically viable. It's much better if the private sector finances those costs. But a lot of people always forget that the infrastructure spending itself doesn't help the economy. It's the infrastructure that helps the economy, but only to the extent that it makes the economy more productive in the future. But the current cost of creating the infrastructure, that is a burden on the economy. We have to pay the cost up front in order to reap the benefits in the long run. So you can't make a weak economy strong by spending more money on infrastructure. Well, I don't really have a target, let alone just for the end of 2021. I mean, I think silver prices are going up. How high they go in any one year, it depends on factors that I can't predict with any surety. But I think prices are going much, much higher. I mean, because especially once the dollar breaks and it really starts to fall precipitously, and people start to perceive correctly the gravity of this situation, and they start seeking out precious metals as stores of value, I mean, the prices are going to go way up.
To change your